I get it. Reaching out to a venture capitalist can be super daunting. Today, I'm going to help you overcome that fear, but with some tips and tricks on how to not only contact a VC, but to get them to take you seriously. And if you stay to the end, I'll share my #1 resource to finding the right venture capitalist for your company. Tip #1, warm intros are gold when it comes to working with venture capitalists and getting your foot in the door with them. This is because in venture capital, there are massive information asymmetries, and VCs are super busy. They don't have a lot of time. And so they use warm intros as a way to provide an initial screen and vet a company, right? And an entrepreneur. Think about it. If I can convince somebody that a venture capitalist knows and trusts that I am a quality entrepreneur and have a quality business, and they're willing to stick their neck out on the line for me, then the VC can interpret that as like, hey, there might be something here and it's worth my time. The other thing is they maybe owe this person something, and so they're out of obligation need to take that intro and take it seriously too, right? So either way, it puts you in a really good situation. So where do you get these warm introductions, right? Especially if you have no connection to the venture capitalist. Well, I'm going to put them in order for you of importance. So the #1 is, who are entrepreneurs that the VC has backed and that the company and the entrepreneur has done very well for that investor, right? In that case, think about it. That VC is going to trust that entrepreneur's judgment, and that VC probably owes the entrepreneur something because he or she is driving a lot of value for their portfolio. So how do you do that? Lots of entrepreneurs are willing to mentor and guide and support other entrepreneurs. You'd be surprised if you reached out to an entrepreneur that's had some success and asked them some questions and see if they'd be willing to help. And oftentimes they will, especially if you're working on something super interesting and it's relatable to what they're working on. A close second to that is entrepreneurs that the VC wishes they had backed, but weren't able to, but they have a relationship with them, right? So oftentimes there are entrepreneurs in your community that are doing really awesome, really exciting things, and lots of VCs wanted to invest in them but couldn't because there was only so much room in the round or what have you. Oftentimes that entrepreneur still has a good relationship with the VC and can make that intro, and that can be a really, really strong warm intro. The other ones that I think are still valuable but maybe a little less valuable is other investors that are either investing in your company or that are looking at investing in your company and know the VC. Those can be good introductions. Service providers can also be a good avenue for introductions. So service providers would be like lawyers, accountants, debt providers like venture debt providers, bankers. Those types of individuals can be really helpful as well. And then frankly, after that, like anybody that knows them. So I've gotten introductions from like family members in some cases. Although those aren't as strong as introductions from other people, they can still be really valuable because at least you get the foot in the door, and I'm willing to sit down and have a conversation with you and hear you out. And then it's all on you to convince me that you're building something really interesting. Okay, so you get the warm introduction. What do you do then? Well, you gotta get the VC interested. So one of the best ways, in my opinion, is figure out what's gonna get them excited. And most VCs are gonna be excited by traction, by proof that like you are building something really incredible. So like if you don't have revenue yet, what do you sell? You sell your team, you sell yourself and your experience, you sell your vision, you sell your market and how big it is, and you sell the pain point and how you are solving it in a really unique way that is going to be ultimately disruptive to this huge market, right? Ultimately, you're selling vision, you're selling market, you're selling yourself and your team. The more impressive that you can make those things, the better. If you do have traction, that is where you want to highlight. Talk about like the quality and the number of customers you have, or the engagement of your customers, or ideally like your revenue and your revenue growth and how much customers are spending on your product, right? Those types of things are going to catch investors' interests. If you watch some of my React videos on Shark Tank, you'll see like investors get excited on the panel, and myself included, when the entrepreneur walks in and they're like, I did 3 million in revenue year to date, right? Like that's impressive, right? Because we know how hard it is to get people to actually pay for a product. It's not easy starting these businesses. And if you can do that, you've accomplished something interesting, right? You're solving a pain point. Okay. If you're not fundraising, here's my tip. You should still be reaching out to VCs. The difference is don't ask for money, ask for advice. Because VCs, like, we want to help entrepreneurs. That's why we're in this game. We're happy to spend some time giving you feedback on your pitch, giving you feedback on your business model, telling you like what kind of metrics you need to hit. Take advantage of it. Start building your relationships early before you need the money, because that's the easiest time to have the conversation, right? Being approached by an entrepreneur and who's straight out of the gate, like, will you fund my business, is really hard, because like right out of the gate, I'm probably going to say no, because I don't know you. I don't know your business very well, right? All of those things. But if you've built a relationship with me over the course of a year or two, and you come to me and you're like, hey, now we're fundraising and you've been along with us for this journey the whole way through, then I'm much more likely to have a positive impression of your business, of you, and be more interested in investing. Here's the piece though that I want you to really focus on when you're meeting with a VC. Focus on product market fit. Either your approach on how you're going to get to product market fit, or once you've achieved product market fit, be able to demonstrate how you've actually achieved it. Most venture capitalists are looking for either a pathway to product market fit or that you've achieved it. Now, what is product market fit? At its core, it's that you have created a product that your market is just dying to have, right? And they're willing to pay a lot of money for that product. If you can show that, then it's just a question of like, oh, hey, you've got the product, you know the market looks really big, let's give you money. So you can go and get your product in front of those customers, because we know as soon as they see that product, they will jump all over themselves to buy it, right? That is exactly what VCs want to look for and want to invest in.
But Peter, I don't know any VCs.
I don't know any people that can give me a warm intro, or maybe like, I don't have time to build relationships. I got to raise money today. No worries. At the end of this next topic, you'll have the information you need to overcome that obstacle. And I'll share with you my #1 resource to help find the VCs if you don't know them already. Here's the thing. Venture capitalists will oftentimes even look at cold emails. Now, if you're going to send a cold email, think about all the things that I just mentioned. Catch my attention. You got to keep them concise, and you got to hit on things that get me interested. And the more you can personalize them to me and my situation, the more likely it is that I'm going to respond. In our case, like, we run primarily a growth equity fund. I'm looking for companies that have achieved product market fit and that are growing really quickly. And so when I get emails and the person's talking about how great they are and all of their experience and blah, 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 that doesn't get me as excited as when they say, hey, here's our revenue, here's our growth, here's our engagement from our users. Our market's big. We just need to put more money and more fuel on this fire to make it grow and get bigger and bigger and bigger. Those kinds of things catch my attention. And if you can convince me like you've achieved product market fit, you're getting really good growth, then even though it's a cold email, like, I'll engage and I'll have that conversation, because I'm not going to be arrogant enough to think that like my networks are superior and that I'm going to see every single good deal, and that good deals can't be had outside of my network. I, for one, will look at cold emails. The bar is super high, to be honest. So keep that in mind. You're going to send out a lot of cold emails before you get a catch, but it can work, and so can be worth doing. All right, so here are my tips as you're crafting your cold email. First, do your homework. I get all of these cold emails, and it's like they had a format and then they just punched it out and sent it out to a bunch of VCs. Like, I can tell that you put like no thought into who I am as an investor, right? Personalize it. Talk about portfolio companies that are similar to yours that made you attracted to reaching out to me. Talk about the things that I care about. So I talked about how I'm a growth equity investor. I'm looking for companies that have achieved product market fit. Demonstrate that you've done that. Demonstrate that you're growing, right? Don't send me a cold email if you're a seed stage company, because we clearly don't invest in seed stage companies. Do your homework, personalize the email. Focus on the hard things that you've accomplished, whether that's traction, hires, customer type, whatever, your team, your background. Focus on the hard things you've accomplished. Keep it concise, because I'm not going to spend a ton of time reading it. So you only really have like 15 seconds to catch my attention. So make sure you hit the things that are most relevant and most exciting about your business at the top. Lastly, get ready for lots of rejection, and more likely than not, just like, sending emails out into the void where nobody ever responds, because you'll get a lot of that. But if you do it right, you can land some really interesting connections via cold email.
But how do I even know who to contact and how to reach out to them?
Well, here's my number one resource that you can use that's free for everybody, anybody, to find the right venture capitalist for their business in their industry and at their stage. So the folks over at nfx.com, which is another venture fund, have put together this incredible tool called signal.nfx.com. And on that website, they have a list of thousands of venture capitalists organized by the sector and the stage where they invest. It's an awesome tool. You can plug in your Gmail and they'll show you different connection pathways that you can leverage to get in front of that VC. They'll talk about all the different deals they've done, how much they invest, what stage. It is an incredible resource. I send entrepreneurs to it all the time. It's a great place to just figure out what are the VCs and who are they and what kind of checks do they write that I should be in front of. And then they even give you some guidance in terms of like what are my best pathways to connect with that venture capitalist. If you're fundraising, this is definitely a resource you need to check out. And although it's not as helpful, a secondary resource is PitchBook. So PitchBook actually will have contact information for a lot of VCs and can be really valuable. The downside is PitchBook's super expensive. So if you can find a friend that has access, ask them to help you identify what are some of the VCs that might be a good fit for your business and get some of that contact info that you can use. Or be willing to fork over the like $15,000 to $20,000 that a subscription will cost. There's a lot of really great data in PitchBook, so it's a super valuable resource and worth the money for what it provides. But not every entrepreneur's got 20 grand to spend on a database, and I totally get that. Look, at the end of the day, meeting with entrepreneurs is one of my favorite things about being a VC. Being able to play a small role in their overall massive success and being along for the ride is super fun and satisfying. And I think I'm not alone. I think most venture capitalists, we do what we do, not just for the money, but because we really want to help entrepreneurs. So take that to heart. Most VCs are looking for a reason to talk to you. Give them a good reason to spend time and invest that time learning about you and your business and finding ways to work together. And on that note, I can help you break into the world of venture capital if the things I said resonate with you in my next video, where I'll talk about breaking into the world of venture capital.